Hey guys, welcome back to another episode of our Top Producer Series. Today I've got Jason King with J King Real Estate. He is actually, this is kind of a cool story. I don't know if anybody, Jason, I don't even know if you know this, but when I became a loan officer in January of 2010, the first real estate agent that I called to solicit business from was Jason King. And we went to lunch, and I remember it pretty vividly at this point still, 10 years later.
Yeah,
We went to Greek Boys and had lunch, and we've been friends and business partners ever since. Do you remember that? Did you
yeah.
know
Well, look at you now.
that? uh, but yeah, that's cool, man. And so we've known each other for a long time, and it's been kind of cool seeing like we've grown our businesses together, and I've seen you go from an
Yeah,
agent to having a team to opening your own company and then growing that company. And I know you guys do a lot of business, so if you don't mind, why don't you just talk us through how you've grown and what you guys have done?
sure. So I opened my own brokerage about 5 years ago. I've been an agent, I guess about 15 years. Like Brian said, he's seen me grow up through my old brokerage and opening my own. And now, almost 5 years into it, we have 10 agents. We're doing about 15 million a year in sales. They're all very productive. I'm very blessed that I have a great team of agents behind me. Kind of the same way as you are. When you first started, you were doing all the loans. Now you got a big group of people doing the loans, a lot of loan officers.
Yeah,
It's been very good.
it's a different dynamic too. The management and the coaching piece of it is a little bit different than the production piece of it, but equally
And
valuable and equally. Is that
I still produce out there. So I think that's an advantage that my agents have because when they come to me with issues or contracts and it's stuff that I'm experiencing with them at the same time. And I have my finger on the pulse about the market changing where some of the brokers aren't out there producing anymore. They're more managing. Um, they don't know those slight shifts in the market, quite like we do. But
sure?
it is a balancing act trying to manage and produce at the same time.
But you're doing it and you're doing it successfully. So congratulations to you on that, man, because it's really cool to watch.
Thank
And
you.
then was the point of our kind of interview today was we were talking. I saw you posted. I guess it was last week. An interesting post kind of caught my eye that we in the Columbia MLS or the CMLS have dropped under 2,000 active listings for the first time in I don't know how long.
As long as I remember, my mother was a broker back in the 80s, but they didn't really keep track of the records back then. But as long as the MLS has been around, it's never dropped below 2,000 active listings. And that's from Newberry all the way down to Hopkins, Elgin, all the way out to Orangeburg. I mean, that's a big area. And as of today, it was 1,923 active single family homes. That's just incredibly low inventory. I think during the crash, like '08, '09, we had about 10 to 12,000 active listings. And I think
Wow.
a balanced market is probably somewhere around 5,000. So we've had low inventory for a while, but to go below 2,000 is really, really low.
And that poses some significant challenges and probably requires a mindset shift of buyers and sellers, to be honest with you. I mean, to me, low inventory means it's a great time to sell your house. You're going to get top dollar and probably multiple offers, and you can just kind of take your pick. But as we were discussing, what are some of the strategies that you guys would implement to deal with a low inventory environment like we're dealing with?
It's definitely shifted to a seller's market because they have the leverage. We're getting offers in the Irmo area in probably a couple hours, multiple offers. A lot of people are bidding up over the asking price, just as long as it appraises. So for sellers, it's great. For buyers, I think it's really important for them to be prepared and come into the negotiations with their best foot forward. If you're asking for closing costs, that may be a little difficult. Or if you're not really pre-approved yet, I mean, that's the great thing about working with Palmetto Mortgage is you guys make sure that they're pre-approved up front. So if we're looking at three offers and they're similar, the pre-approval is going to make all the difference, for the buyers. But we also try to look at what we call the hidden market. A lot of for sale by owners, people that are thinking about moving. So um, the days of buyers just looking on the internet, sending a listing to their agent are kind of over. Now the agent has to go out there and really search for things that are about to hit the market, or for sale by owners that are motivated to sell.
So that's a great point. So then, what, if you don't mind, what are you? So to me, I hear, all right, well, if I'm a buyer's agent, if I have a buyer client at this point as a real estate agent, I need to be out there actively prospecting. And so that's a basic tenet of real estate sales and has been for years. But with the advance of technology, it's kind of we've gotten complacent maybe a little bit, and so now you're having to work a little harder to find the deal. Is that what are you guys doing to mitigate that?
We've gotten used to having so many choices out there with properties to choose from, and our main focus was guiding that buyer on needs versus wants and how much they can afford. But now it's kind of shifted more to the seller side. The agent really has to go out there and hunt for listings, and not just wait for them to pop up in the multiple listing service.
So I was talking to an agent, a friend of mine yesterday, and this is not a secret, but there's data sources out there where you can get neighborhood data with email addresses and stuff like that. I mean, so are you guys, like, you have a borrower that's looking to buy in the $300,000 price range in Irma. Are you going around to Irma neighborhoods and saying, okay, well, I like this neighborhood, I like Ascot or whatever, so I'm going to go get a list of Ascot and just start calling around saying, hey, I've got a buyer in your neighborhood. Are you interested in selling your house? Is that the kind of strategy that you're implementing, or beyond that?
Yeah, it was difficult during COVID, but we've always leaned heavily on door knocking, where you go around, and if you're doing an open house, we go around, we talk to the rest of the neighborhood, let them come by and check it out, have some cookies and juice, but you're also discussing with them how the market is in their neighborhood. And if we have a buyer looking in that area, we'll go around and we'll knock on the door and say, hey, you want to sell your house? You know, or we're sending out postcards to that area, or we're doing Facebook posts on how the market is doing in, say, Ascot or Chestnut Hill at the time, and people respond back to that. So you're really searching for those people that are thinking about listing but aren't quite there yet. Or maybe they don't realize how the real estate market is.
Yeah, it's amazing to me because, you know, we get fully engulfed in this industry on a day-to-day basis, but the general public has no idea. Most people don't even realize and would have no frame of reference if you said, hey, there's less than 2,000 listings in the MLS. Okay, well, what does that mean to me as a potential home seller? And so you're right, when you get down to it, it's just good old-fashioned selling. And a lot of selling is explaining the market to a potential home seller.
And we use like seller's market, buyer's market, different jargon. But with inventory being so low, it's not only that they have the leverage of selling quickly, but at a higher dollar amount too. So values are going up, appraisals are going up, because people are willing to pay a little bit more if they can find that home quickly.
You know, if you would have asked me 4 months ago, maybe 3 months ago, 3.5 months ago, when all this hit the fan, right?
Yeah.
I would have predicted the exact opposite. It shows how smart I am. You know, I mean, you get a unemployment rate that spikes to 15 or 16%. You got, you know, stuff just kind of going haywire. Everybody's scared to go outside. I would have expected more people to say the opposite of what's happening. But right now we're in a really robust and strong real estate market. All right, so we've talked a little bit about how to maybe generate a listing to get somebody, like, to help to facilitate a sale for your buyer. What other things are you guys thinking about right now?
But I think the beauty of our real estate brokerage here at J. King Real Estate is we're small enough that we still keep those personal relationships, and we're really actively listening to what a buyer wants, so that we can help narrow that focus into like one neighborhood, or just houses with garages, you know, and really listen to them. But we're large enough that we have a team of 10 agents that can jump whenever a buyer is ready. We have the experience behind us, so we've seen shifts in the market and how that's going to change. And we've been around long enough that we have great real estate contacts. So whenever you need an appraiser and they're booked for 3 weeks, or you need a lender that you can call up on the phone and say, hey, I'm ready to put in an offer on this property. You know, and I think that's key. You don't want to be too big where that buyer or seller is just a number, but you don't want to be so small that you can't handle all the different pieces to it.
So let's assume you've got a buyer client. They've looked around for a while. Finally, a house pops up on MLS, or you find something in the hidden market, and all of a sudden they're going to make an offer, and the listing agent responds, "Oh, yeah, cool. You're our third offer of the day." What are you doing to help position your offer to be accepted over the other offers?
Yeah, I think the pre-approval is key. I think having something solid where if that listing agent calls you up and says, "Hey, how good are these people? Are they just pre-qualified? Are they pre-approved?" And something you mentioned to me about getting that underwriting up front and really checking out all their documents. If I was the listing agent, I would say, "Look, I know this deal is going to go through. If we're going to pull it off the market, let's go with the one that's most qualified." And sometimes that's a little bit more important than price because it still has to appraise. I think it's about putting your best foot forward. It used to be that we wrote a personal letter that said how much they really loved that property.
Yep.
But I think more so now it's about the finances and being solid. A lot of buyers are having to save up their own closing costs. I know that's a harsh reality with the shift from a buyer's market to a seller's market, but if you're not willing to pay your own closing costs, then you might lose the deal. We call it roll it into the price of the home, which basically you're borrowing a little bit more, but then you have to worry about it appraising. So if I have two offers coming in and one's asking for $3,000 in closing costs and the other one is $3,000 lower in price, but no closing costs, you're almost going to rather that because it's the same net to the seller, what they get out of it, but it's less risk because we don't have to worry about that appraisal.
And you mentioned the pre-approval piece, and I'll talk about one of our strategies. And for any other loan officers that end up seeing this video, it's not specific to us. We just have it kind of dialed in. But we call it an advanced approval. And what we'll do is, like you mentioned, we'll get the pre-approval, get the application, get every piece of borrower documentation, which most loan officers are doing some variation of that now, or you're getting income and asset documentations to verify things before sending that buyer out to write offers. But where we kind of differentiate ourselves a little bit is that we will take it a step further, and then we'll submit that as we call it a TBD. So the property address is TBD, to be determined, but we'll get it advanced approved. So we'll have the whole credit, income, asset file from the borrower underwritten by the underwriter. Any conditions that she would ask for, we go ahead and pre-get them from the consumer. So at that point, we have a loan commitment. That is just as good as cash in most situations because you're going to close in 2 to 3 weeks, or less in certain situations. You've got an offer that you already know the borrower is good. So the only real risk to the seller at that point is, cloudy title, or inspections going poorly, or an appraisal coming in low, which has nothing to do with the lending side anyway. Most likely a cash offer would walk if it appraises for 10 grand less anyway, or at least renegotiate the price. And so you're putting yourself in a situation where still in our market, 90 to 95% of the transactions are with financing. And so if you're up against 3 other offers with financing, oftentimes you'll win even if you aren't the highest priced because you've got a solid, almost guaranteed borrower at that point.
You don't have to worry about so many hiccups on the lending side. I mean, on the listing side, that's what we're always worried about. I always call the loan officer that writes the pre-approval letter and ask them, what do they think? Are we looking at hiccups or obstacles along the way? With a pre-approval letter, it's really what that lender tells me whenever I call them up, and then I relay that to my seller. Yep. But with a solid approval, I mean, that's going to make you feel a lot more better about accepting that offer. The difficult part with it being such a seller's market is what are those people that have a home, have a lot of equity in their home, they want to buy something, but there's nothing out there. Then they see something and they can't jump on it because they need the equity out of their home. You were telling me about a program that you have where, what do you call it, like a recast?
Yeah, and again, that's not something specific to our company, but it's a cool strategy because you're right. A lot of people assume they need 20% down to buy a house. Obviously, we know most people watching this video will know that's not the case. But a lot of buyers assume that. And then also they don't want to be burdened with the higher payment that would come with a lower down payment amount. And so if we're in a tight spot where you don't have time to execute the sale of your house to obtain the equity to put down on your new house, you can do what's called a recast. And this would not be specific to us. It's most investors out there will allow it. But what happens is you'll put the minimum down or somewhere close to the minimum down on the house prior to selling your current residence. And then after you sell, you buy, you close, you move in. After you sell your house, you're going to obtain, you'll get a lump sum check at the closing, right? So for math purposes, let's just say you're buying a $300,000 house, you put 5% down, so your loan amount is $285. Then you sell your house and you get $100,000 in equity out of it. Well, you can take that $100,000 and now we will have a strategy conversation with the buyer to say, hey, is the best use of these funds to put down on the loan, or is it better to invest that in other ways? I mean, with rates in the 2s or low 3s, it's almost more advantageous to invest that money than it would be to put down on your, but there's a lot of consumers that don't want a higher payment. So what you do is you take that lump sum, chunk it down on your mortgage, and then do what you mentioned, which is a recast. And basically what happens in a recast is there's 0 to very minimal closing costs, like maybe a $250 fee, and the investor will re-amortize your payment with the new loan amount over the same term. So on a $285 loan amount down to a $185 loan amount, you're going to save $400, $500, $600 a month in monthly payment with no fees to do it. So you're not burdened with having to wait 6 months and then go through a refinance and paying all the closing costs over again for a refinance. If you already qualified for what is historically low interest rate, you can do the recast as a strategy to buy the house, be able to move quickly without having to sell your property first.
I think that's an amazing thing that Palmetto Mortgage can do. I mean, with the inventory so low, when someone sees a house that they want, they need to be able to jump on it. They don't have time to list their house and get it sold and that home still be out there. But if they sell their home, then they have like 30 days to find a place to live, and the pickings are slim. So I mean, this enables people still to take their equity out of their home after they've already bought a home and find that perfect home.
Yep.
I think that's a big advantage to working with experienced agents, experienced lenders, so they know they have that option out there. It's not like they just have to list their house and stay in an extended stay or try to find a rental, which there's no rentals out there. I mean, at least this opens up some options to them. Rentals are even lower than homes for sale. And if you just take $1,000 a month, which would be incredibly low rent around here, but $1,000 a month, you're throwing away $12,000 a year just so that you can find that perfect home. But if you can go ahead and buy a home, pull the equity out of yours afterwards, then you're not throwing away that $12,000 trying to rent a home for a year.
Yeah, and there's additional strategies to that too. I mean, so if you have enough equity, you can get a home equity line of credit prior to selling and then have that lump sum available to you. You don't have to draw on the line of credit, but if you find the house, you can then draw on that line of credit. Now you're going to get less equity in the future when you sell your house because but it's the same strategy, same concept. So there's multiple ways to skin that cat. And of course, all this assumes that the home buyer will qualify with both mortgage payments, because if you haven't sold prior to buying, then you're going to have to qualify with both payments.
So their debt to income ratio, they need to make sure they can afford 2 house payments and still pay their bills.
Yes. Now on paper, people qualify for more than they typically feel comfortable paying. So a lot of times this works. I would say for the people that I have conversations with this strategy about, 60 to 70% it actually works for. But a lot of times it doesn't. So we have to back up and punt and figure out another strategy, which may end up being having to find and pull the trigger very quickly. A lot of times what you'll do in that situation, and you tell me maybe this works, but if you get a couple of offers and they're for 30 or 40-day contracts, you can extend that out to a 60-day contract to allow your seller more time to find a property.
Right. Yeah. So if we're listing a property, normally it takes 30 days from contract to close. That's what we're looking at. I think that's good to mention, because buyers sometimes when they present offers, they think it looks more attractive to a seller if they can close quickly. But right now, with it being a seller's market, it's almost the opposite. If you can give them 45 days or 60 days to close on it, then that's almost more attractive to the seller, just as long as they're solid financially, and we don't have to worry about the loan falling apart.
Sorry, I didn't mean to cut you off. I was gonna say it's all situationally driven, right? Every situation, every client's going to be different. But having this knowledge, I think, is beneficial because a lot of, especially younger realtors, have been beaten in quick, 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 quick. And I understand that mentality because as a salesperson, the more houses I sell, the more income I can earn. And so I want to sell quickly. But you're right. And
Right.
in this kind of disrupted market, having the background and the experience level to say, hey, maybe this doesn't make the most sense. Let's re-strategize. Having that flexibility in your sales approach, I think makes a lot of sense.
And it goes back to the relationships in the business too. We have a lot of great agents in Columbia. And I know there's a lot of new agents, there's a lot of older agents that have seen the market shift. But those relationships, a lot of times I try to call up the listing agent and say, look, do you have any offers in? Should I just go ahead and give you an offer? Should I go look at it first? What's important to the seller? I think it's cooperation over competition. Working with other great agents in Columbia and actually talking on the phone and not just shooting a text or shooting over an offer can mean all the difference in the world. I can't tell you how many times I've had agents say, well, I'd rather work with you because I know you and I know how you do business. And that means a lot to me. And I think the same way. If I recognize that listing agent on the other end, I'm going to try to pick up the phone and call them before I do anything else. It's a relationship business, not just transactions.
I think that's an easily forgotten mantra, but especially now, it means more than it maybe did a year ago.
Yeah.
So, man, I appreciate you doing this. I think we've given 3 or 4 actionable tidbits to agents that may benefit from this. But before we sign off, do you have any final thoughts?
Just that if a buyer or seller's out there and they're thinking about listing their home and they're just curious, give us a call. Or if they're trying to strategize for the best way to buy a property in this market, I mean, we're here for advice. It's not just about the sale. And I think the same goes for you. I mean, J. King Real Estate and Palmetto Mortgage worked together for a long time, and we'll be here for a long time. So it's good to have that relationship already built.
And you're right. There's a lot of times, well, even here, here's a recent example of something that happened. So we're not here just to get the loan or get the transaction. We're here to offer advice. And we were working a deal the other day where the seller of the property of the loan we were doing wasn't comfortable with their pre-approval letter. And they actually got really attractive financing terms. And so when I reviewed it, I said, guys, we could match this. But if you've already gotten in that, you're getting a really good deal. You need to feel comfortable with the terms that you got. And so I could have probably, lowered my margins and beat that deal by, an eighth of a point and got the deal. But that wasn't the point. The point was I wanted to confirm as a value add to the realtor I was working with that seller was getting attractive, good, fair financing terms. And they were. And so it's not just about the deal. You're right. It's about adding value wherever you can. And I know you do that. We try to do that whenever possible. And I think that makes for a career rather than a job. And that's what
it's the relationships. I enjoy this. I love hustling every day, but it's because of the people that we meet, the people that we help, and most of our business comes from previous clients. And I think that means we're doing something right.
It's definitely a testament to quality service for sure. Man, I appreciate
you having me on here. I hope this helps other agents too, and I think it's a good thing that you're doing, just putting it out there, see what other agents are doing, what they're thinking about the market.
Man, honestly, I was expecting to do this a couple of times, but the feedback I've been getting has been so overwhelmingly positive that I feel like the more ideas we can share and get out there, the better off the whole community is going to be, which, in any situation where, a rising tide rises all boats kind of thing. So the better we can make the industry that we're all going to benefit from. So yeah, happy that you were willing to do it, man. I appreciate the time, and we'll keep it up as long as people are liking it.
I appreciate it, man.
All right, brother. Talk to you soon.
All right. See you.